We've got an earnings alert on Advanced Micro plunging after hours. This is semi stocks, as Tim has mentioned, have gotten absolutely wrecked in the sell-off. Let's get to Bob Pisani at the NYSE for more. Hey, Bob.
Hello, Melissa. AMD is one, of course, the two big semiconductor manufacturers, the other one being Intel. The top line for AMD, a tad light, $1.65 billion in revenues versus expectations of $1.7 billion. Now, that's down 6% quarter over quarter. It was led lower by the graphics revenue in the computing and graphics division. That's the largest division of AMD. It has about 60% of their revenues. It includes the desktop and the notebook processors and the chipsets. Earnings 13 cents. That was a penny short of expectations. The big problem, though, is the revenue guidance, as it always is with these chip stocks. $1.45 billion versus expectations of $1.6 billion. Gross margins look pretty good, 40% versus 38% expected. Now, this follows on a really bad day for semis in general. Texas Instruments revenue fell short of forecast. It also issued weaker than expected guidance, which it attributed to a slowdown in demand among semiconductors across all of its markets. The main semiconductor ETF we've talked about for days now, SMH, saw twice normal volume on a nearly 7% decline. That is its worst day since November 2008. And the broader basket of semis still in bear market territory, down 22%. From its 52-week highs. Despite today's debacle, AMD is still the best performing stock in the S&P 500 this year. It's up 121% year to date. We should also know, by the way, the tech-heavy NASDAQ now firmly in correction territory, down about 12% from its recent highs. Finally, a quick programming note. We'll hear more from AMD CEO Lisa Su when she appears on Squawk on the Street tomorrow, 9 a.m. Eastern Time. Back to you, Melissa.
All right, Bob. Thank you. Bob Pisani at the NYSE. You know, taking a look at the after-hours reaction to AMD, what's interesting, what stands out to me, is Intel is actually trading higher by about 1.5%, granted on light volume, but it is up.
Yeah, but it's also getting throttled over the last couple of weeks.
Yes.
So maybe it's up because people are saying, well, maybe AMD is not eating Intel's lunch, so maybe there's some rotation back, which sort of makes sense to me in terms of where AMD can go. Look, and I was bullish on the way up, and I was bullish at the top, and I was bullish on the way. So I've been right, and I've been very wrong. But now you have to ask yourself, all right, where does it make sense? I think she'll do a good job tomorrow explaining the quarter, the CEO. I also think $15, if you go back and look, was a level that we sort of topped out at a number of times earlier this year. So past resistance becomes support. I'll say this, though, again, Dan's not here, but you know, the chips are the building blocks of everything. And Taiwan Semi down 4% today. Texas Instruments, Tim mentioned, down another 8%. I mean, chips going down does not sort of augur well for what's going on broadly.
We also had bad news out of an Apple supplier out of Europe yesterday, AMS, which certainly didn't help. We've had DRAM weakness that we've been concerned about.
Yeah, Micron even talked about, right.
So the entire sector is having issues.
We're back to September 2017 levels in the stocks. So that tells you something, despite the fact that the economy, well before this moment right now, was chugging along, and we weren't questioning the cyclicality of where enterprise was reinvesting in their businesses. And then all these other ancillary exciting parts, whether it was gaming, whether it was blockchain, there's all these parts of the chip space that have been reasons for people. I think AMD frankly got ahead of itself. That may be easy to say now after it's pulled back 35%, but you know, this is where should the stock trade? You know, at 25 times, this is a $25 stock.
It's still up 100%. Still up 100%.
Yeah.
So to Tim's point, all those things that these chips were trading off of, if you look back on Micron and you overlay a chart of DRAM pricing, there was a disconnect. You overlay the chart of DRAM pricing now, and you see where it should have gone. It should have followed that. That's what Micron usually does, but it got extended on all of those other reasons.
So how much of the semiconductor collapse, or whatever you want to call it, is idiosyncratic to them, oversupply, and then when you have a commodity type, you know, that pricing just falls apart? And how much of that is related to the economy more broadly? I don't know. I think but there's some element of specific, you know, that's specific to the semiconductor.
Well, I think the tariffs have a lot. Listen, I think the tariffs have a lot. This again, we like to blame. It's easy to blame the Fed. We can, and quite frankly, I say
you
again,
like to.
I like
quite
to,
frankly,
but not this Fed, by the way. But
okay.
But it's another conversation. With that said, they have nothing to do with DRAM prices and everything that's going on in the chip world. Nothing whatsoever. The tariffs, on the other hand, have a lot to do with it. So you can't ask the Fed to back off based on tariff talk that might well be exactly the right thing we should be doing. Maybe China is ripping us off. Maybe this is long overdue. What do I know? But there's a cost associated with that, which you brought up the other day. To think that you can play the tariff game and not have market repercussions, you're seeing it now. You can't do it.
So basically, the Fed shouldn't be asked to back up the administration's policies, even though it's impacting or potentially impacting the U.S. economy.
No, but I agree with Guy wholeheartedly, and I don't think. I believe in our system here, and I think this Federal Reserve will do what they need to do. Whether that's the right policy now, and it should have been the policy 2 years ago, is a debate we're going to continue to have. But I do think that the Fed ultimately is going to continue to do what they have to do. The cyclical story died in March. Let's be clear. That's when the stocks started selling off aggressively.
All right, let's get back to AMD. It is down by about 24% right now off the back of earnings. Let's go off the chart to Todd Gordon of TradingAnalysis.com. Todd, how's it looking?
Hey, Melissa, AMD was really trying to hold at 23, 24, 25. That was the key support from my technical point of view. I was just trading 17.5. That is no bueno. Very big drop. The drop from the highs that we've seen in the mid-30s is quite justified here. So if we take a look at this longer-term chart, and we've actually looked at this. This is not quite the one I'm looking for, but we're going to go back. So we're going to start shorter term first. This is down on the daily chart. Okay, we can see that all technical algos are going to be watching this uptrend here. We tried to get a bounce. We couldn't. We fell below. That's right around that $25 mark that I just mentioned. AMD looks like it could go lower. Support from that $8 low earlier this year has been lost. This is the daily. Let's go up to the weekly chart and get the context of exactly where AMD has come from. Maybe I can put some reasoning behind this failure. Same chart. Let's hit the weekly if we've got it. It's an amazing chart. I really want to show it to you. It's just a long. No, that's not it. We're gonna roll with it. But anyways, if you go back to even the 2001 high in AMD, you connect the 2007 high trend line. All you guys can do this at home. We just failed at that uptrend resistance. So go look at that. Here's the SMH. These are the holders. And what I find quite interesting from the credit crisis low is we've had a very nice, beautiful, symmetrical uptrend and pullback. Notice the first pullback here, 29%. The next one here in 16, 27%. When I captured these charts about halfway through the day, we're at a 27% decline. So this is still a little ways to go here. Actually, excuse me, no, let's go down from the weekly down to the daily. We're not quite to the 27%. Right now, we're at about 21% off the highs in SMH. That 27% symmetrical decline will come in at 82 in the SMH. So what that means, basically, is if you start to break through 82, on the SMH, that counterbalances all the corrections we've seen in the course of this bull trend. At that point, for me, I would say bull trend over in semis, but not until you break through that $82 mark as we're showing right here. So just looking at those size of the pullbacks will, for me, are indicative of if the uptrend is still intact.
All right, so Todd, we've been talking about semiconductors in the sector being sort of a canary in the coal mine when it comes to the broader economy in terms of how it feeds into all these different end markets. Have you seen any sort of correlation? I mean, when you take a look at a chart and it looks ugly in semis, do you think, that's confirmation that industrials and transports and all these other sectors that are economically sensitive aren't going to see a bounce either?
Well, for me, I'm seeing the biggest relationship of semis to overseas and Asian. We've talked about the decline in the Chinese markets. You look at the FXI, you look at the EEM. I mean, Chinese technology, I think, is highly correlated to these semis. But turning it back to the U.S., no. I mean, I feel like the semis is such a dispersed sector industry group here. I'm personally long Intel against the 43 reporting earnings tomorrow. So I see more of an Asian story dragging the semis down and not so much in terms of relationship back home for me.